Hey guys, how's it going? My name is Tom Spark. Welcome back to the channel. Today I want to talk about something interesting. Is the 2008 housing crisis just like the modern AI bubble? That's a question I had after watching The Big Short. Interestingly enough, we still have not had a real recession since that movie came out, and it's been some time even since the subject of that movie's recession has been. So it's almost been around 18 years since we had that recession. So let's go ahead and see if the AI bubble has any similarities to the last time we had a recession in the United States. Now guys, if you're not aware, I have a website called Recessionist Pro. This is a free and paid dashboard. Think of it like a freemium model. You could go on the dashboard and see directly our recession risk indicator. Not only that, but you can see other things like how the model is made, various other indicators, and you could even upgrade to premium if you want even more information. This is a sneak peek what it looks like when you have a paid plan like I do. You can see all sorts of cool forecasts here, so much information. There's also a free blog as well, and the model is pretty complex. I've been working on it a lot, various different iterations. So if you want to level up your kind of investing game or something like that, you might want to check out Recessionist Pro. This website is not financial advice, but it gives you the data and information that you really need to make decisions when it comes to investments. There's also investment ideas and various other things like that on the platform. So go ahead and check it out in the description down below. There's a free dashboard available and a premium dashboard that you can upgrade to if you want even more information. So guys, let's go ahead and talk about this idea that the AI bubble could be the next bubble, just like the housing bubble. So guys, the main kind of thesis we're talking about first is that there's tons and tons of money being invested into large language models. Now, I'm not even going to really use the term AI in this video because what AI isn't necessarily what a large language model is. I think of large language models today as like a modern kind of Google search. Now, it's not exactly the same technology, but it's essentially how people are starting to use it. They go into ChatGPT, they ask it questions, they learn about things. It's very similar to how when Google first started its search engine back in the day. However, it's not the same as AGI. What AGI is artificial general intelligence, which actually can think and learn on its own. Now, large language models are getting pretty complex and have a lot of use cases, and they're for sure disrupting the marketplace. But at the end of the day, it's not true artificial intelligence. That said, these companies are dumping tons and tons of money into these large language models because they want to be the first ones to get artificial general intelligence. So guys, there's projections of around $7 trillion invested into large language models by 2030, which is a crazy amount of money. And as of right now, there's been $350 billion invested in by 2025 alone for this infrastructure. So this is a huge investment of money. And there's various components to this. There's the prospectors, the shovel sellers, and the diversified players. Think of it kind of like the modern gold rush. So who are the prospectors? Who are the people mining for gold? Who are the people trying to create artificial general intelligence? Who are the people spending and kind of developing this large language model infrastructure? Well, that's OpenAI, Anthropic, Grok, and Gemini, and those kind of things. These are the people digging for gold, trying to make these models. Now we have people selling them the shovels, and that's NVIDIA. And people like this making GPUs to power these kind of systems and data centers to make these models. And then we have other people invested and integrated into these platforms that give them money, like Microsoft, Google, Meta, and stuff like that. They kind of do everything. They are investing some money into these models, making their own, and kind of trying to just kind of be involved in the space. Now, the similarity to the 2008 housing crisis is that this kind of infrastructure and everything like that is built on a huge pile of debt and borrowed money. You need borrowed money to make data centers. You need borrowed money to advance these companies and hire people and stuff like that. And lots of times they are kind of borrowing money together and against each other. And it's kind of created this weird kind of circle of investments. And that's kind of why people are concerned about this AI bubble. So the problem is that these large language models aren't really generating money. I see people saying that this is not like the dot-com bubble or the 2008 bubble because these companies are making money. And sure, NVIDIA is making money by making graphics cards and stuff like that and selling them to these companies. But at the same time, they're also investing a lot of money into OpenAI and these other platforms. It's kind of negating some of their profits. Additionally, these large language models aren't really charging that much, not really profitable. So the question is like, where is all this money going in the first place? Well, it's kind of going into just expanding and expanding and expanding, making more data centers, hiring more people, and just making more development. Now we see this exactly with some companies like Oracle. If you take a look at Oracle's stock price, it was like around 25 to 50, in that range, around $30. And now this year it's jumped 3x, and it's now a huge company, surged 40% to over kind of estimate everybody's. It just kind of exploded past everyone's estimate. But if you look at it recently, it's not really doing too well. But the house of cards is really the circular nature of these investments and things like that. Like I said, it's basically kind of like NVIDIA is paying its customers to buy NVIDIA products. Basically, OpenAI gives NVIDIA some money. They use the funds to buy chips, and then NVIDIA invests money back into OpenAI. It's very kind of complicated, all the different components of these companies and how they're working together. But essentially, it's kind of like a house of cards. Just like I was saying, Oracle just plunged 45% from its peak last week, and $80 billion in market value was erased in a single day. So this is kind of an indicator of the bubble kind of bursting a bit. We also saw NVIDIA, it's around down 20% from all-time highs as well. So we're really starting to see some of these components of this bubble kind of cracking right now, although I wouldn't say it's kind of cracked yet. Why is the bubble kind of flawed though? What is the model that these companies are doing that is flawed? Well, it's like they're using high interest debt to buy cutting edge NVIDIA GPUs, they're renting data centers from third parties, and then they're renting chip access to other cash burning AI startups. So there's just like a lot of debt going around. And that kind of comes back to the main thesis is like, what are we really building? Is it AI or large language models? And that's the vision, right? They want to revolutionize work, business, and information itself and make true artificial general intelligence. But on the ground, there isn't much profitability happening right now. These models aren't really making that much money. Sure, there's subscriptions and stuff like that. But at the end of the day, Netflix is also a subscription company, and it also charges $20 a month. And it probably doesn't take as many data centers to run Netflix as it does these huge large language models. And in fact, OpenAI loses money on every user due to high computing costs. And they're not the only one. And if you look at the dot-com bubble, there was way more telecom fiber laid out that was needed. The housing bubble, more houses were sold than people could afford. So it sounds very eerily similar. Another thing that's kind of an issue is that unlike fiber that was laid underground, these huge data centers are becoming a little bit of a political issue and could kind of slow the growth of these companies, since these data centers require tons of power, tons of water to cool them down, and they're just kind of like eyesores, and a lot of communities are starting to push back against them. That said, am I saying that AI and stuff like that and these companies are just going to go kaput when we have a recession? According to my model, in 3 to 9 months, not necessarily. I do think it's going to be like the dot-com bubble. These companies are going to stick around if they can survive. I do think a lot of the peripheral companies that are creating just kind of, you have a company that's just making it so you can interact with AIs a different way. I think a lot of these companies that are getting investments aren't going to do that well, but the core companies, NVIDIA, ChatGPT, OpenAI, etc., are going to survive, and eventually they're going to start getting closer to AGI. And I do think that's probably going to happen after the recession, but I think they're going to stick around. So how do you navigate this paradox? Well, I think a shakeout is ultimately pretty likely. AI isn't going away, of course, but I do think for a little bit of time soon, we're going to see hype-driven investing slow down due to more global and macroeconomic factors, as we've been discussing on this channel. So guys, if you like this video, let me know down in the comments down below. Like, comment, subscribe, and I'll see you again very soon.